When you see, well, it's only, what, 1,500 points, I guess, 1,300 between Friday and Tuesday. Could that be just a really sharp bear market rally? Do the probabilities favor that as a sharp bear market rally, or a rally
with that
where...
question, yeah, they do.
They do.
I mean, we have seen a lot of relief rallies, and they've often lasted no more than a few days. So I think the assumption should be that this time is no different. But of course, if you do look at past bear market cycles, we've seen some massive relief rallies, and we want to help our clients identify those and leverage them. So now we're trying to understand whether this is one of those. I mean, we're talking 20% plus in some cases. So we want to know if this rally will manifest itself and become that kind of major relief rally. And early indications are that it's not. So we had that return of the short-term overbought conditions. Intermediate term momentum is still to the downside behind the S&P 500, behind Bitcoin, and we just don't have any incremental improvement in our long-term indicators. All of that we had believed that would occur closer to that October timeframe, and we don't see any change in the indicators to suggest otherwise. So we're making the assumption that this rally will fail or fade not too far from current levels. I think the market is challenged in that volatility is quite oversold. If you look at the VIX having come into the 24 area, very oversold, and that occurs at a time when the mega caps are quite overbought coming into their earnings reports. And I just think that creates a really challenging environment for the market. However, there are some metrics that we are watching to try to decide if this is something more. And we look at those momentum gauges, we look at overbought, oversold gauges. And so far, there's some incremental improvement, but not enough to suggest that we have some kind of lasting relief rally here.